This morning, the SGX Nifty is a little quiet, but you would have to say there is no big crack coming in for global markets. They're all holding out in the green. Mitesh, what trading calls would you then recommend?
I think, on the stock side, we have been trading with more long bias, so there are clearly more long positions recommended. The first one is a sell though. Adani Power has been weak in the last few days, can now be sold with a stop at 35.5 for targets around 31. Hindalco, which managed to get past and closed above its 200 average, now can be bought with a stop at 104 for targets of around 112, 113 on the upside. Muthoot Finance had a very strong price and volume action day, can now be bought with a stop at 114 for targets of around 135. Indian Hotels is a buy with a stop at 43 for targets of 49, and JSW Steel has been a recommendation for last few days, but even now can be bought with a stop at 549 for fresh targets of 605 on the upside.
Ajay, banks are under pressure because of NPA concerns and economic conditions are not strong. IT stocks are doing well because rupee is under intense pressure. But what has cracked meaningfully in the August series is the FMCG index, which is down 14%. What explains this price action?
I think when large FI selling happens, I think it is but obvious that you would like to pare down your positions in those sectors where you have large positions. And if you just go back over the last 2 years, I think it is some of the FMCG biggies along with pharma biggies where most of the large FI buying had happened. In addition to some of the strong names in banking like HDFC and HDFC Bank. So I think when you saw selling from the FI end over the last week or 10 days, I think it is but obvious that they would be looking to pare down their positions from some of these very liquid mega large cap stocks, and that's the reason why I think you saw sort of a cut in names like ITC. Although we must say that I think if you were to take a fundamental view with the medium term perspective, I think some of the names like ITC or Britannia I think look extremely attractive because the earnings growth continues to remain robust out there. With the best monsoon since 2001 and area under cultivation having gone up substantially, I think the rural demand will continue to remain very buoyant post-harvest. And I think from that perspective, FMCG is one sector where the allocations will continue to remain on the higher side from the investors, and we would continue to advocate ITC and Britannia as the top picks in the FMCG sector.
Ajay, what about private banks? Is it time now to start nibbling into the sector, or do you think you'd still give it a wait?
I think if banking obviously is the largest contributor to Nifty, and one can't sort of if one has to take a position there, then clearly I think I would not be adventurous. I would stick to some of the marquee names in the banking sector. HDFC Bank and ING Vysya Bank I think would be my favorites in the large cap and the mid cap space. I would still refrain from getting headlong into the public sector banking space simply because there will be a lot of headwinds they have to encounter over the next 2 or 3 quarters. I think on the NPA front, I think we still have around system-wide 10 to 12% if you include restructured assets, bad asset problem. The NIMs continue to remain under pressure. So I think both these headwinds will need a quarter or two for us to wait and see how they pan out. And hence, in the current environment, it would be better to be with extremely safe banks like HDFC Bank or ING Vysya Bank, or maybe at lower levels in ICICI Bank.
Ashwini, comment on the FMCG stocks. The FMCG index in the month of August reversed by about 14%. Do you think the bull market in large cap FMCG stocks is over?
Well, they have performed fairly badly. If I had to choose between the 3 quote-unquote defensive sectors, I think you first have techs, which have outperformed, pharma, which has been lukewarm, and FMCG, which has really probably lost its mojo. So while they have reached fairly attractive levels and long-term investors can buy in, but clearly the momentum has been broken. ITC, etc. Most of them are below their 200-day moving averages. That's never a good sign.
Ajay, do you think the large cap IT trade is not getting crowded, but it is getting extremely crowded? Just about every brokerage is bullish on it. Just about every fund house is now overweight on IT stocks. We had the vice chairman of Tech Mahindra on our show yesterday, and his view was that the depreciating rupee is great, but it is only good for 1 quarter or 2 quarters. The business environment has not changed dramatically the way markets are pricing in.
I think, well, I would say that I think the valuations still continue to remain not so expensive. I think, if one were to look at a stock like Infosys, even at the current price, Infosys is trading at around 15.5 times FY15, and we are expecting an earnings growth of at least 11% in the current financial year and around 10 to 12% in next financial year. The company has extremely strong ROE of 22%. So I would tend to disagree that a stock like Infosys or Wipro or NIT Technology is trading at stratospheric valuations. No, I would tend to disagree there. And insofar as the US is concerned, I think one clearly seeing that the second quarter GDP numbers again clearly indicate that the recovery out there is sort of gathering steam, and hence that's the largest market for some of these players. So I would sort of still be in the camp that would advocate not letting one's eye off some of these strong IT names and continue to sort of advocate holding positions in some of the IT biggies.
Okay. Sesa and Ranbaxy. Mitesh, what is going on? These are two stocks which have really surprised everyone on the upside. Beaten down Ranbaxy has appreciated by 30% plus. Sesa in the August series has added about 35% plus.
See, I think Sesa in the short term has done its targets of around 195 to 200. That's an important weekly supply point. Maybe you will see the stock take some breather. Ranbaxy on the other hand has also met one of the targets in the sense that it's like trading around the 200 average, which is now at about levels of 423, 424. But the overall pattern does suggest that once it gets past those levels, there's a good chance that we'll see higher levels, and I would look at possibilities of stock going to about 460 to about 465 on the upside. So 10%, but wait for the stock to start trading about 200 average. Once the supply level is taken out, you have more confidence in taking a long position.
Ajay, what is your sense about the rally we've seen in the metals pack? I mean, even last series when the index lost about 8.5% and perhaps each and every sector was in the red, it was only IT and metals which held out. What is it that you're liking?
I think the stocks were beaten down quite savagely before the rally happened. And secondly, I think globally we had seen some early signs of some of the metal stocks doing well, but India had not participated in the early stages. So we had some sort of a catch-up that happened in some of the metal names. Also, the third point is that the sharp fall in the rupee. I think quite a few of these players, the pricing of their products is dependent on the landed cost, and sort of the fall in the rupee clearly sort of led to a belief that the prices sort of for their products also will get adjusted on the import parity basis. So I think these are a couple of the reasons why we saw some of the leading metal names doing extremely strongly. And I think insofar as Hindustan Zinc is concerned, there is this belief that the government will sort of get out of its residual stake, and Vedanta would be able to sort of consolidate its stake out there, and that has been primary reason for Hindustan Zinc doing well.
Ajay, really appreciate your time and always nice to have you on the show. Let's take a break. When we come back,